Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, the 3rd of August, 2020 at 5:20 p.m. Central Time. Well, the gold market up $5 tonight, but the real news of the day, which got over $2,000 an ounce, didn't hold it, but you poke through there. You probably cleared out a lot of stops in that process, and then the market pulled back, and now the question is, what does it want to do here? The dollar was slightly higher. The euro was, in fact, it was at one time a lot higher. It gave up the best gains of the day, and the euro was a lot lower and gave those up. So currency plays are coming in. We're pretty flat right now in the energy markets. Bonds and notes still getting a bid right here. We have a lot of central banks this week coming out with monetary policy. I think it's the UK, doing this from memory. India, I think Australia is doing it as well. And some South American one. Could be Brazil, I'm not sure. But they're all coming out with their monetary. So we'll see what that offers. When you come to a weekly chart, the highest we've gotten on the weekly chart so far is 1984.30 on a closing basis. This is a close-only chart, not intraday highs and lows. And the market's at 1971 as we're talking. Here is a bar chart, and if I step back a day on this, which we should do, you can see today you hit $2,000, $2,950 to be specific. And from there, the market came back, settled very slightly higher, lost back off of that move, $23 as you can see, and it's trying to hold right in here. At least it didn't close lower, it did close higher. What do we have in terms of the swing lines? Well, we certainly have a pattern of higher lows and higher highs. That's bullish. Until you take out 1952.30, you're friendly in this chart. What about moving averages? I didn't label these yet, but I'll get them done tonight so that they're fine for tomorrow. You have the 18-day in the red, the 100-day right here. Still looking to the upside, very strong. There is a problem. What is that problem? I call the line in the sand the 18-day average. If this market tried to go back to it, you'd break the pattern of the higher and lows. So I'm not looking for that. Rather, this market, and I'm talking the moving average, got days of making up gain to get close to that number. And if we go back, we're moving at about $8, $9 a day on average. That's what I'm showing you. So it's got a ways to go to get back to 1952.30. In the Bollinger Bands, that's what these black dashed lines are. Again, I didn't label anything today. But you have the upper Bollinger Band. You had been every day practically hitting that since back here. And today you're pulling away a little bit from it. You can see what you're doing. That could be a sign the market's going to consolidate all these gains. I haven't seen anything that says a big break's coming. I'd be nervous if you took out 1952.30, but even that would not turn the chart bearish. It would leave this phase of the uptrend, but it would still, as long as it's over the 18-day average, have a bullish bias. In the slow stochastics, this is what I watch. When the slow stochastics embed, which means both numbers that make up the reading, and they're two, think of them as moving averages going back and forth over each other. The formula in slow stochastics is identical for the red and the blue line. They're called a K and a D line. One uses 3 days worth of value, the other 5. That's the whole difference. And the red whips around the blue. If the red were to get back and stay under 80, it'd be a sign that price momentum's been lost. Price and the 18-day average might make a run at each other. You're not getting that. So there's another moving average, which I don't show here, but I show in my subscriber video, that is where I think the pros are going to buy the market. It'll be in this general zone right through here, and I won't show it here. I show that in the paid-for videos. The differential between D's gold and D silver. Now I'm moving. Remember, we were the August gold Sept silver. I'm moving to D's. Still very much in favor of the silver market. And when we look here, I'm going to stay with Sept silver. Even though I've gone to D's gold, the popular trading month right now for the futures is Sept silver over D's. The pattern is one where you came down here, you took out this low, then you rallied back here. So I've got a low and I've got a higher high, but I really have a lower low. You stepped out of the trend. What else did the market do? It lost its embedded reading right here. This is how you lose it. unless it comes back immediately the next day, the odds favor momentum is going to try to drag price down back to the 18-day average. You can see it didn't do that. Now, something that can negate that would be re-embedding again. The market's not trying to do it. So I, for one, believe momentum leads price. And until proven wrong, I think that buying the rallies here is problematic in the market. I like the gold chart better than I like the silver chart at this point. In the copper market, you came down today, and if you get my morning subscriber video, I said, I think the pros are covering the shorts. Why? This is the first time you've hit the lower Bollinger Band, so you got to go all the way back into March, believe me. Go take a look. And on the first challenge, what am I going to tell my followers? That's where I think the pros take money off the table. Well, if you did so, just so you'll know, you got as low as 283.10. The Bollinger Band was 285.30. You finished 291.20. That's what I think the pros did. I am not saying you had to be short or not. I'm saying anyone that was short in a pro nature that writes algos and things, I think they look at where the Bollinger Bands are in the first hit. Do I know that? I don't. I'm giving you my educated guess, but I have 51 years of education being a broker. I talk to algo traders. I understand what they write in. I couldn't do it myself. Don't pretend I could. A lot of it's psychology, keywords. It's quite complicated. But I think they look at key points as exit for a moment because they're expecting things to happen. And I would not be surprised that that was a number. Where's the resistance then? The 18-day average, that line in the sand. So when you have that line in the sand and you're narrowing in the way you are, you're going into what I call one of those pipes, sideways action, where there's a lot of choppiness that starts to develop. Fits right in. In the platinum, you broke last week hard enough where you left the uptrend. You did that right like this. You broke the pattern of higher lows, higher highs. If you do that and you lose the embedded reading, I look for price and the 18-day average to make a run at each other. It all happened in one day. I did not expect that, but it still did what I was looking for. So now the market has to restructure itself, and that's what I think it's trying to do. The bias is up, momentum is flattening out and corrected an overbought condition. It's past history, but you don't have a bullish pattern of higher highs, higher lows. In the palladium market, you did the same darn thing, and now you're just drifting right through here. The trend is down, the bias is down. If you were to take out 2189.70 and the market did not take out, let's use this low of 2079, you could develop a trap for those that have been bearish, setting the market off back into an uptrend in terms of the swing line. The bias would be up, but you haven't turned momentum. I think the chart's still a problem. Last in the dollar index, look at this break that you finally got out of this market. You got your reversal on Friday. You had follow through today. As of the close, you haven't lost the embedded reading. You literally have to drop tomorrow. The way that this closed and all, the market's going to fight to lose the reading, so a lower day is needed, I think, to keep it. We'll see if that works out to be the case. You know, we talk about so much here that I do want to remind you that tomorrow this is what you're going to get. You're going to get the factory orders. Oops, I wanted to give you that, and I'm sorry, a price was just hit. You're going to get the factory orders data. That's going to be released on Tuesday morning. They're looking for it up 5%. The ISM numbers come out at about 8:45. Last month's index was 39.5. You want to get that eventually over 50 for an expansionary number. IC, SC, Red Book groups, retail sales, they have not been performing as well as you'd think. Look at all the retailers that keep declaring bankruptcy. You're not over. You're going to get another slew of them next year. There'll be those that hang on into the Christmas time frame, and then they'll call it a day. You don't believe me? Mark that I wrote this and told you this August 3rd. We'll see if I'm right or wrong. U.S. Treasury this afternoon announced that estimates second half of 2020 borrowing going to be $2 trillion. And these are your numbers, your estimates for tomorrow's. Well, first, we get the API numbers out tomorrow at 3:30 in the afternoon, so pay attention to those. All right, let's talk about what I've got for you. You know, we write about so many markets, you can get dizzy sometimes at it, and the markets we write about are research. We cover the whole array of futures. So if you're one of these traders, you want to know the options traders, what are they doing? Futures, what are we telling the specs to do? What are we telling hedgers to do in the marketplace? We write newsletters for all these different parts. And as I said, we cover the whole thing. Go out and try to find real news on, for example, sugar, coffee, lumber. You're going to find it hard. We do it all in here. The meat markets. I don't mean we just cover it with a paragraph. A lot. If you're a technician, we're going to give you pivot point analysis. We're going to give you what we think price counts are doing, so on and so forth. You might not even know what that is. How to get this? Go to our website. You'll see free offers on the bottom right. Take a look at it and away you go. I'm Ira Epstein. You have a great day and I will talk to you all tomorrow.